Hey everybody, Dan here. Happy Tuesday. Not so happy if you're a bull. Okay, so in this video, I'm just going to go over the major averages and then our active trades. This is going out to everybody though, as opposed to just members. So hopefully you'll like what you see and do what you need to do. All right, so let's get started. On the SPY, now I've been mentioning this for quite a while, that it just kind of feels like a bull trap here. And I think that's what we're getting. We're getting this rebound as we've had before, rebound off the trend line, reestablishing this as a trend line, and then we're getting a lower high versus this time. And now we're at a new low. So don't get me wrong, nobody really knows. This could very well turn out and we could go to all new highs, or not. It could continue to give us a lower high and then a lower low, and then it's more of a topping pattern. The reason I'm mentioning this is, not to cover my own butt, just to explain to you that we really don't know, and you just have to trade according to what you see, not what you think. Believe it or not, you're really not paid to think in this business. There are nuances to that. You got to be smart, but you can't think you know too much. So I'm looking at this though, and the overall trend is still good. Forget about all these lines. Would you say, oh, the S&P is falling, going lower, oh, it's going to reverse, we're in a bull market? I can't say that because I don't know. I'm just saying this, follow the bouncing ball. Right now, we've still got about 20 minutes to go till the close. You can see the time down there, and we are not getting a good close. My sense had been today, hey, we'll probably get some kind of a goofy rebound, but it ain't going to amount to much. I was wrong. I don't think we're getting a rebound at all. And I think that this is one of the biggest reasons is the Treasury note. It's spiking up again. Apparently, the Fed is unable to buy bonds today. And when they buy bonds, it drives the yield lower because they're inversely proportional. You get the same amount for a bond, and if you pay less for it, then the yields are higher. If you pay more for it, the yields are lower. That's just the way it works. So they said that there's a glitch, apparently, so they can't buy bonds. Editorializing for a minute, I feel like the Fed has been one big glitch since it started. We never got any market volatility like the way we do now. But that's my feeling about the Fed. But I'm sure some of you are listening to this and you're thinking like, my God, the Fed is the best thing since cloth masks. But as long as rates are going higher, you're going to see markets repricing that. Okay, that leads us to the NASDAQ composite, little bull trap, which I had kind of suspected, and now that trap continues to go. This is definitely a change in character versus this, you see. So tech is really kind of falling out of favor, and that's also the case when rates are going lower, because generally speaking, and it's a generalization, which, they're all well-deserved, generally speaking, techs are borrow intensive. In other words, they'll have debt. They need to borrow money in order to finance their R&D, et cetera, et cetera. So that's why I think you're getting a real bleed out of that. And then the mid caps and small caps, neither one of these are doing very well either. And excuse me, the diamonds, the Dow Jones Industrial Average testing the 150. You look at the weekly chart, basically flat. I mean, you can look at this and say, oh, it's still doing well. Sure, because you've got this as a context. But if you do it this way, then maybe it doesn't look so great. It's just kind of barely drifting higher. So I don't put much faith in this either, though my suspicion is you will see a rebound tomorrow. for no particular reason other than technical. And that's kind of the way I would even look at, I'll get on to my other stocks in a second. I would look at the S&P that way. I would be really surprised if the S&P did not go higher tomorrow. I'd be really surprised. Sorry, I'm just getting over, oh my God, the Omicron thing, so I still got a little stuff in my throat, but I am fully unvaccinated, so there's no danger of you getting it. And so I think we're going to see a rebound from here, probably see a rebound here, basically all of them. I think we're going to see some kind of a rebound tomorrow because that's what stocks do. I wouldn't look, it's not amounting to much, not in my book. In my trading account, I literally have just a couple positions, and I'm going to cover both of them today. I have a lot of cash, and I'm getting in better shape because I'm spending a lot of time exercising because I know there's nothing going on in the market. Okay, so we're looking at the NASDAQ. Can't help but look at bubble vision here. ARK, you guys, you know all about this. Kathy Wood is the new messiah. 50% decline from the top is at $80, so it's below that now. The adage is that 80% of all super high flying stocks, when they top, they'll ultimately go down 50%. 50% of them will ultimately go down 80%. And, it's funny, what's his name? Bill O'Neill. That was a study that Bill O'Neill did. And I've looked at several of the high flyers. And so far, man, there's a lot of them that are in the 80% group that are at least down 50%. So this is not the kind of place that you want to go. The CEO, whatever you want to call it, of ARK, Kathy Wood or Woods, Woodshed, said that she said that she expects, of course, we all expect certain things. She expects the compound return for the ARK, maybe just for the innovation here, but it's probably because it's all bullspit. It's probably all the ETFs that she has, like 40% return. Compound return. I don't know seriously if she's talking about every single year you're going to make 40% or what it is, but she's predicting amazing, wonderful things from these uber cheap, worthless companies that she owns. And so here's why I'm kind of going into this detail. A lot of our traders, you get it. You've seen this. You're technical. You look at certain stocks. I'm just thinking about one. You're looking at Twilio, and it was awesome back here, but you're not enticed about it now. I'm just picking this chart out. A lot of our members, you look at this, and you're not looking to buy Twilio. Oh, I'm going to get it at 200, and that'll be awesome. You see this. You see what's happening here is kind of what I'm talking about. We can see this. It's just kind of rounding out. This is not the area that you want to be in. And so it's the same thing with this. At some point in the future, maybe tomorrow, maybe a decade from tomorrow, but at some point in the future, these tech names, these disruptors, things like that, I was going to make a joke about indigestion, eating too many beans, and that's a disruptor, but I can't make that. Anyway, all these disruptive companies, at some point they are going to start moving higher again. There's no question about it, but we just don't know from where. And this is the thing I've seen. I think it was even a member posted in the forum, but I think it was probably more likely on the cesspool known as Twitter. Another awesome stock, where somebody was saying, well, over the next 5 years, and listen to me, this is really important, over the next 5 years, she could turn out to be right. Okay, and this is a key point. Maybe that's true. Perhaps that's true. Let's say that's going to be true. The question is, until this is proven to be correct over the next 5 years, Do you want to have your money sitting there being wrong, knowing that sometime over the next 5 years, you're going to be right? That's just a risk of price and time. In other words, you're risking a reduction in price because guess what? The trend is lower. That's what happens. Trends continue until the one magical moment when they end. This ain't it. And so you're holding a stock through a pullback to where the price that you paid is much higher than it is. So every day or every week or every month, you are continually wrong. And so you're getting clipped this way on on the price. But then also time goes on, so you're getting clipped on the x-axis as well. So you're just like wrong all the way around. Don't do that. Instead, decide what your time frame is on things. And if you're a day trader, it's your 1, 5, and 15-minute charts. But decide what your time frame is on your trading, on your position, and don't deviate from that. Don't ever catch yourself, saying like what I just said here, where you're kind of rationalizing and, and let's face it, you're looking at the glory days here, and this is beyond ARK. It could be on any company, on any stock that you made good money on or you didn't make good money on and you're pissed. Stock goes up like this, it's awesome, and then, it goes into this phase and then finally starts coming down here. And so what you're thinking about is you're still thinking about the glory days, and you're seeing this go lower, and you're not getting the fact that you've had like mental style drift. You're no longer a trend trader. Now you're an I want to be right trader. And so you're fixated on this stock and it's not for technical reasons because this thing sucks. So that's not it. It's not for fundamental reasons because I've said this before. There is literally no way to gauge fundamentals on holdings in any actively traded ETF. You're basically holding a trading account. And so, I could look at all the various stocks in my account and look at the growth, look at the fundamentals on them and say, my account therefore has this much, this is what the fair market value is based on the fundamentals. But I can't even do that because I'd have probably ditched one of my positions before I even finished with the analysis. So you have to understand that in this market, I'm telling you, if you never look at another piece of fundamental data, this is a pro tip. If you never look at another piece of fundamental data on a stock, but instead just say, I'll just follow the chart. I'll just follow the trend. You know what? You're going to do better. Promise you. You're going to do better. You can thank me later. Stocks trade technically. Some would say, and I would, that they always have, but because of the free, information like financial information, it's so much more readily available now than it used to be, that knowing the fundamentals of a company doesn't give you an edge. It literally doesn't give you an edge. And so you got to just trade technically. And when you see this type of thing, just stay away from it, because the only reason you would buy this stock right here, the only reason, or you would own it, is because you thought it was going to do this. And you don't get to think that. That's silly. That's the only reason you would buy it. Because if it instead does this, maybe zigs and zags here a little bit, then you were wrong to buy it here because you did not expect it to do this. You expected it to do that. And so one thing in trading, you got to expect to the expected, not the unexpected. When you're trading the unexpected, you're guessing. Never forget that. And again, we can look at all the various stocks in this ETF, or frankly, you know what, in the NASDAQ composite. It's not, again, it's beyond ARK here. I'm just saying, don't believe, last year's bull spit and think that it still applies when the chart looks like this, because it doesn't. But with respect to all tech ETFs. You know, you can look at the XLK. Okay, you can look at these. We could bang through them all, but I'm not gonna. Let's just see. Okay. We'll just kind of look at the bad ones. Okay, so EPAM, you going to buy this stock now? Oh, it's cheap, $500. No. You know, some of these, no. You know, no. I mean, I'm not looking at any of these to where I'm saying, like, God, I got to get them while they're hot. Maybe AMAT, you know, you keep looking at that. But what I'm saying is, so many of these stocks are, you know, they're not where you're going to make money right now. That's what I'm saying. I'll tell you where you're going to make money. And I posted a free chart of the day here on this last week and noted that my price target on this is $100. And I acknowledged it's a wild asterisk guess. Just looking at the squeeze, I've seen these types of squeezes before, and they always go farther and faster than you think they will. When they pop like this, they always go here. So does that mean sell at $100? No, not at all. Shoot, you know, it could blast right through it. It's just a price target I picked to say, all right, where do I think this stock is? It's reasonable for this stock to go. What's a reasonable target for this? Not a prediction, but a reasonable target just based on, you know, frankly, experience, based on the number of charts that I've seen. And to me, you know, $100 looks like the deal. And at a minimum, I guess is what I would say. At a minimum, I would expect this squeeze to play out to $100. So that's where, you know, that's where I am. It's one of the bigger positions that actually, it's not quite so big now because I traded out of some of it today. I sold some of it. I'll give you the full deal. I sold some of it, and then I bought some of it back. I just kind of wanted to take some off the table. Kept the rest, but then ultimately bought it back because I think the stock's going higher. So this is a big one. Our stop right now, gang, if you're trading along here, is 72.40, which is slightly more than, blocks in a slight profit. But if you're selling now, and we're up over 15% now, but if you're selling now, you're locking in a profit on your entire trade, because let's say you're selling at a 15% profit on half, and you set your stop at break even on the other half. That's if the stock implodes and you're stopped out, you know, you're guaranteed a 7.5% return. Personally, I think it's going higher. Okay, and then tech is another name that we're in. Guys, this just continues to run. You know, it's really all we can say. 30.10 was where we jumped in, so we're doing okay. And then Freeport is still running along too. Basis is 41.30, so we're up a little bit on that. But I like the way this pattern's shaping up. We did get stopped out of Norfolk Southern. I kind of had high hopes for that, but now we're getting all the rails coming off the, you know, basically coming off the rails. So we got derailments all the way around, so I would stay away from those. Anyway, that's all I got for you in this Fits in 5. Turns out it's Fits in 19. I will say, oh, by the way, in members, I'll send out a link for our for our training session tomorrow morning. Because of a scheduling thing for me, I'm actually going to be teaching it early, and I'm actually, it'll either start at 6 o'clock or not. We'll go Eastern time. It'll either start 9 o'clock Eastern time or 10 o'clock Eastern time. I still have to figure some stuff out. So look for that link in a separate email for members. Okay, I'll see you guys next time.